Hey, all, Jeremy here with Escape Velocity Trading, going through the weekend market bias report to update your bias for the trading week ahead and get in front of potential trade setups. Diving right in, futures market just opened about 45 minutes ago, and I'm not sure how much credence I'm going to put on the futures open this week. Usually I look at the futures Sunday afternoons after 3 p.m. Pacific Standard Time because it can give you a read of any news digesting that the market has done over the weekend. But right now, I see on our economic calendar that Fed Chair Powell is going to speak in about 15 minutes. So I'm interested to see what that speech entails and how the market reacts to that. So I'm going to be waiting on the sideline here, not doing any futures trading today, just kind of waiting to see how the market digests that, and then going into my trading week on Monday. But with that said, the trend is up. We are setting higher highs and higher lows. We have held our diagonal support. Our MACD on the daily chart has been kind of in a consolidation zone here and is trying to break out of the diagonal resistance. So if it does, we should get another leg higher in the market. We are overextended on the RSI on the daily chart. And if we throw this out to like a 5 week chart here, and actually I'm going to go over and do that on this chart instead. And let me get rid of the buying and selling. There we go. You can see I day trade this a lot. Uh, on this, we are quite overextended in terms of the Bollinger Bands as well. We are quite a ways away from the 20 period middle Bollinger Band here and could use a pullback or retest or at least a high base here to let that catch up. You'll see usually in bullish trends, whenever we get overextended and are tusting or pressing into that upper band, tend to have a pullback and some consolidation to allow that middle band to kind of catch up and act as support throughout that upward channel. So right now, I'm not super interested in playing much to the upside unless it is very short term day trade or like 2 or 3 day trades, being in it 2 or 3 days. So other than that, I am going to be kind of sitting and waiting on my heels a little bit. The NASDAQ is very similar. If we go out to the NASDAQ, you can see we are also pushing that upward bound and have been grinding on it for quite some time. We are still holding that diagonal support line. We've broken out from previous all-time highs. So these are all bullish sentiment, right? There's nothing saying look out below right now. But with that said, again, the risk to reward to me doesn't favor a massive move. And another piece that I just kind of want to throw in there, if we put this out on the 1 week performance here, you can see the week's performance is heavily impacted by just a handful of names. We had Meta that gapped and ran on earnings. It was up 20.5% this last week. Amazon up almost 8, Nvidia up 8.4. Those are massive, massive moves on just a few companies. And the rest of the market looks just kind of like a normal market. So we are starting to see a little bit of separation from the companies that have been leading the charge versus the rest of the market. And I want to see more broad-based support, more broad-based moves in the marketplace personally before I get interested in continuation of some of these charts. Otherwise, I really do feel like we need to see some kind of a pullback into support. So in terms of further moves, I'm going to be much more cautious on any breakouts from here. Probably letting those charts go and focusing just on individual stocks in power sectors, sectors that show relative outperformance, but keeping my time frames fairly short to just a few days and probably not carrying many positions over the weekend. So that's kind of my plan. If we go out to the Russell is a different story. It has been fighting and is actually underneath its middle Bollinger Band here, the 20 SMA, hit its head on the upper band, pulled back. We are starting to see that 20 SMA curl and smile just a touch at us. It's kind of flatlining. Another day or two of price here in between basically 2000 and 1950 would be constructive. And then watching for a break of this diagonal resistance line to be kind of our first signal that the bulls are stepping back in. Ultimate confirmation above 20, 25, and 50 cents. So kind of just waiting on that. If we toss this out to a weekly chart, it is a little bit more constructive on the weekly chart. You can see that we kind of got above this major consolidation zone right here that's been going on for the better part of 2.5 years, or excuse me, a year and a half to 2 years. Got our heads up above it, couldn't hold, and now we are kind of in this no man's land, trying to set a higher pivot low here on the weekly chart. If we can get back above 2025 and have a close above that for the weekly candle, that will signal to me we're off to the races. If not, I'd be looking for a deeper pullback down into like the 1900 by 1820 level on the Russell. Going out to the Dow Jones, Dow Jones is very similar to the S&P and the NASDAQ. It has broken to all-time highs. It has had a monster run. It's up 20% in the last 100 days. So obviously overextended, needs some time to cool off. Basically just waiting for a pullback into kind of this zone in between these two red lines and getting a pivot confirmation to the upside in between those two lines there would be kind of my signal for the next phase of the bull run. But until we get that pullback to materialize, I'm not super interested. If we go out to Bitcoin, Bitcoin is interesting right now. Have been basically going nowhere for the last couple of months, ever since beginning of December of last year. And on the weekly chart, if we zoom in a little bit, it hasn't done anything wrong. It broke support temporarily, but fought right back up and held that support zone. So nothing really saying look out below on the weekly chart. On the daily chart, however, if we zoom in, it is currently struggling to hold its 20-period SMA. And that 20-period SMA is actually starting to curl and roll down a little bit ever since the last basically 2 weeks of price movement. It's been curling down, and I really do not like to get into trades when we see that curling down. You'll notice the last few times that we have seen this start to curl down, it's led to some vicious selling. Each time here, vicious selling. Right here, we got a fake out on the 20-period SMA because it recovered very quickly, but it did have a very significant sell-off. I mean, we went from basically holding the 20 period at 23,342 all the way down to 19.6. So that's a significant percentage drop. Anytime we see these rollovers, especially when the price has run hard, it signals caution to me. The last time we had a major sell-off back here in April, May of the year before last, that started to curl over and it was selling pressure for a long while. I'm not expecting anything drastic like that, but I still think that this 38,000 to 36,000 zone, basically coming back down into the chop from right here, is in the cards. And this actually kind of looks like a head and shoulders pattern where if we would break that 4,000 or excuse me, 40,000 line in the sand, we would probably see further selling. So it's got some work to do on Bitcoin. On crude light, let's zoom back in on our daily chart here. Crude light got sold off pretty aggressively this last week, broke its 20-period moving average, and isn't looking particularly great. But the theme behind oil right now, I really like the general broad market themes behind oil. So if this gets back above the 20-period SMA and closes above that with a good volume candle to the upside instead of these big selling candles, I will be interested in playing oil. So this is definitely on my radar. Going out to gold, nothing really to see, kind of stuck in a choppy range, have been below the moving averages a little bit, above the moving averages a little bit. Really, the next true trade on this is going to be a break above 2100. Between now and then, there's nothing really to see, in my opinion. Going out to natural gas, had a fairly significant gap down and are now just consolidating at lows. If we get 3 or 4 more days or a week's consolidation in between the highs and lows of this little new range that's developing with a break to the upside, I would be potentially interested in playing a short-term trade on that. But it needs some development, and if it breaks and runs away without giving a little bit more consolidation first, I'm just going to let that one go. Finally, let's go out to the dollar index. So the dollar index is going to be putting some pressure on equities this week, especially if it gets back above $28. Right now, it's trading 6 cents shy of that. You'll see that it's at the upper bound on the Bollinger Bands, but if we toss this out to a weekly chart, you can see we have some significant room to run to the upside. And the further up UUP, the dollar index goes, the harder it is for companies to borrow money to expand their businesses, and therefore the more the US stock market is going to struggle. So it's kind of an inverse relationship. When US dollar goes up, it puts pressure on US equities. So I really would like to see this stagnate and roll back over again. I don't know if we're going to see that or not, because it does look to me like it has some room back up to the upside here. So we're just going to have to kind of wait and see how this chart develops. Finally, last but not least, let's go over to the economic calendar. So I mentioned Jay Powell's speech here starting in just a few minutes. And other than that, it's a really light news week. We have ISM services, PMI data coming out 7 a.m. on Monday, and then unemployment claims coming out Thursday. But comparative to last week, where we just had an onslaught of really important economic data coming out on top of really big tech names reporting earnings, this week is going to be much more docile and much more focused purely on technicals. So when you see a good technical setup and a strong indice, take it. If it's not a good setup and there's not a clear spot to take a stop loss, don't take it. So trade safe, trade smart. Let me know if you have any questions.